Good evening, traders. Let's do a brief audio and visual check. How's everybody doing tonight? How's everybody trading this Tuesday evening, Wednesday trading session? Sounds good, looks good. Yeah, getting some of that buffering out. That's why I've been starting it and letting it just kind of work out the bugs. And yeah, so far it's been great this week. Welcome to Signals class. Welcome, Michael. On that note, welcome everybody. It's Slow Markets. I'm Coach Dakota, Coach DBA. As always, in the YouTube chat, there is the top step risk disclosure. This is, in fact, not a signals class, just an educational. Everything that I go over is educational. And yeah, are we going to just sell this market tonight, looking for some type of Trump news to have just some random 80-point sell-off tonight? I don't know. We'll see. We'll see. Coach Hoop, the trollers are out early tonight. Always. Paul, buenos noches. Depending where you at, buenos noches, buenos dias. Yeah, BBC firm. Yes. I did take a payout, and I guess I'm not hiding my balance. I forgot to hide my balance, but yeah, up. You can see I withdrew down to 100,000. Withdrew down to 100,000, and today's trading session, I'm already up 6% this week. 6,400. It's kind of weird. It really is. Maybe we could talk a little bit about this in terms of percentages. It's different. I might have to adjust, trade smaller contracts. I might have to even lower my daily loss limit. Right now, my daily loss limit's at 5,000, which is 5% of my account value. That's very high for how I typically trade, even though I mean, you make 6%, it feels good, but if you hit your daily loss limit, you're going to be losing 5%, right? Give or take, depending on what your account balance is. So it's going to be interesting. I'm not sure yet. I'll probably talk to the risk management team, and I might reduce my daily loss limit. I might reduce it to I don't know. I don't know if I'm doing an exact 1-to-1 ratio from what my account balance was. It'd probably need to be reduced to 1,500. But we'll see. We'll see how my trading goes, and yeah, we shall see. I don't mind with a daily loss limit of 1,500. If so, I'd probably reduce my contract size to maybe 3 contracts, maybe 2 contracts. That's typically probably the right thing to do. But trading's trading. We'll see. That there's a bunch of different ways. There's a bunch of different ways to do it, and I've had some good conversations the past couple of days ever since I took the payout on how to trade with an account size. What percentage are you looking? How aggressive do I trade? How aggressive should I be? What's my account size versus what my trade size is versus my daily loss limit? And there's a lot to talk about. I could probably spend hours and hours talking about account management, risk management, and go in depth on that. It's a never-ending conversation. Everyone has their own opinions on it, which are perfectly fine. Everyone has their own, I guess, constraints and how they deal with it, how they want to manage it, how they trade, their trading style, and their trading psychology and how they handle at it. Some traders. I know earlier last year, early summer, I was fine. Daily loss limit 10,000. I have $100,000 in my account. That means you technically have 10 daily loss limits, right? So some traders look at it like that. Is like I've already withdrew so much money. This is just my high risk day trading account. I'm okay risking 10 daily loss limits. This is 100,000. I'm okay with risking this. Don't risk what you're willing to, only risk what you're willing to lose, right? You don't want to risk something that you're not willing to lose. And I'm not going to say I'm fine with losing this. No one should expect to lose this, but that's kind of the debate I have been having lately, internally with myself and then with other traders, and leaving the daily loss limit at 5 or doing 10 daily loss limits, right? Maybe have a $10,000 daily loss limit. I'm not sure. We will see how it goes. As of right now, this week, I'm up 6%, which is absolutely, I mean, to be honest, you could probably call that a year. You can call it a year. Kind of just be done for the year. But yeah, I made 6%. I'm done for the year. We'll see where we're at next year, and be okay with that. 6% is really good for an annual return, and that was a day. So there's so many ways of thinking about it. Going for your second payout. Great work, James. Are we only looking at the Nasdaq this session? No. If you've tuned into slow markets, if this is your first time, or if you've been here, I will look at the markets I like. We'll do a rapid fire. We look at the Nasdaq. We'll look at crude oil. We'll take a look at the Nikkei, which is the Japanese market. And then we'll take a look at gold. Those are the 4 markets I typically cover. So Nasdaq, crude oil, Nikkei, gold. Every once in a while, I'll take a look at like Bitcoin. I don't trade Bitcoin, but that's been a big topic over the last few months while it's been hovering around 100,000, or at least getting to 100,000. Now that Bitcoin's at 100,000, it's just, I mean, whole lot of nothing, just consolidation. Your account had 577 in it about a month ago. No, motocross, the big board, the live big board that you see, that is total including payouts of live accounts. So overall, I've withdrew over 500,000, but when you withdraw money, your account goes down, right? So yesterday I withdrew 225,000, and yeah, so that's going to stay on that balance. Even though my trading account balance is at 106 right now, I still withdrew that 227, which will stay for the total on the board. D-Man, no more $1 million account goal, I guess. Nope, it's still on the board. I'm still going for the million. I mean, just because you take a withdrawal doesn't mean the count's done. Remember, I made that over that 500 last year, and this year I'm already starting out way ahead. I'm well ahead of where I'm at from last year. When you withdraw money, your account goes down. Mo, that's the best advice. That's the best advice I got for 2025. If anybody knows that, when you withdraw money, your account balance goes down, unfortunately. Blue Boy, how much did I make in 2024? I made it all in 2024. I started trading just last year at Topstep, at least this Topstep account. Anyway, let's move on. I don't mind having some of this fun conversation. Let me go through these markets, and then we can continue some of this fun conversation about this. So as you can see, I have the Nasdaq daily. So the Nasdaq daily chart here, and we all know tomorrow is going to be a very big day. We're going to see a lot of volatility, whether it's one direction or whether it's back and forth in terms of volatility. This is one heck of a week. We started this week up pretty dang crazy, or at least started this week down pretty crazy with this huge, massive sell-off, and as you guys can imagine, look at this rally off the bottom. So if we want to measure this, we've sold off since Friday over 1,300 points, about 6%. And from that low, we've rallied 4%, right? 850 points. And so you remember, Sunday night, I continue to say this, last night too, it was the same thing. Every time we have these big sell-offs, guess what? It's the sky is falling, so much fear, yada, yada. give me that every day. These are just opportunities. These continue to prove to be opportunities. That's why I'm biased to the long side. I think it showed it today once again. Even though shorts can pay, I took a short today in the New York session. I'll go over it. I'll go over my 2 trades if you guys want. I did take one long. Me at Nick for a tick and we caught the bottom of the New York session. That's pretty sweet. Wish we would have held it throughout the entire, but we didn't. But I also took a short later on after fast markets. I went over it. I talked about it a little bit, and I'll go over it again. But anyway, buy the dip opportunity. Here we are once again, and it's okay to have a bias when you make a thesis or you have a longer term bias, because sometimes, just like what we've seen play out today, and we see it play out time and time again, it is important to look at these higher time frames, because these higher time frames could help dictate what happens and possibly help align you with better trades on smaller time frames when you're day trading. So we had that big sell-off, and then we completely rallied. And now we're kind of sitting right in the middle, right? We're sitting right in the middle of this move. We're sitting pretty dang close in the middle, whether you want to consider Friday's high or maybe the close of Friday. I mean, however you want to look at it, we're essentially pretty close to the middle, maybe a little bit above the middle. We're just right in the middle of this. Now, going in, as we start to zoom in, you could see that's, remember, once again, and I'll go over this later, that long last night, remember that long last night in slow markets played off pretty dang well. We got a lot of the fun conversation and the negativity in the chat, and the long paid last night. It worked out really well. If you guys remember, I was down $500. Took a couple 1 or 2 losses because we had that news come out with the tariffs that dropped the market off 80 points, and we rallied up during slow markets, and then I woke up this morning with that was a $2,500 winner or $2,700 winner. Took out my $500 loss. I ended up starting the New York session around $2,200. So that was a nice trade last night for the longs. But here's what I'm looking at, and here's what everyone else is probably looking at as well this week. We do have this Friday where we closed, right? We also have this gap that is also important, right? And then we have this low that we made overnight on Sunday. So these are some important levels that I'm marking out, and I'm curious, is this on Topstep daily levels? I know Topstep daily levels. Yeah, look, there's one right there. Look at this, Topstep daily levels. Heck, this does it for me. Right? But it doesn't do this. So sometimes it's okay to use your own levels. Topstep daily levels is nice. Look at that. Nice, beautiful. Topstep daily levels can work. It helps just confirm, right, what we're looking at. So this is what I'm watching. This is what I'm looking at going into tonight, going into tomorrow. We do have this level. This is a nice zone, right? We did break through that. And during the New York session, we broke out to the long side. Everyone knows I was looking at this level. This was a key zone right around these mid 500s. I was actually looking closer to the top end. I think during the New York session, I was saying 560s. And sure enough, it played out really well. That was my one short I did take on the New York session. And so what I'm going into tomorrow, understanding there's going to be a lot of volatility. We have FOMC, we have earnings after the bell. So it could be a very, very ugly session tomorrow in terms of scaling down, widen your stops, expect some sporadic moves, expect higher than normal volatility, and all that good stuff. And then the question is, do we continue to rally overnight and tomorrow? And are we going to fill this gap? Or are we going to make a rally and maybe just at least test this as resistance, right? So this is the two things. Are we going to come up and test this as resistance? And then are we going to fill this gap? And I mean, it's anybody's question, right? It's anybody's guess. There's a lot of support and resistance around this one too, around these 850s. So just looking at this from the long side, right? Looking from this on the long side. Yeah, we'll see. I don't know. It's interesting because I'm doing these technical analysis, right? Doing a lot of this technical analysis. And so when we're going through this tonight, is technical analysis going to mean anything during FOMC? For me, no. I don't know. Does anybody in the chat trade technicals during FOMC? Because an FOMC candle could just go straight up and straight down and nothing is going to happen. I think for me, what's important is after the FOMC comes, after the release, we get a press conference. And then during that press conference, we're going to see a lot of volatility. So I think after the FOMC release, maybe after or during the press conference, we could start to see some of these technicals come into effect, right? So this is just a theoretical example, right? I'm looking at it from the long side, but you can imagine the same thing to the downside if the market sells off. And let's just say, for the sake of argument and for the sake of example, okay, this is FOMC right here, what you see here. I'm going to make this green. Let's see if we could do green. This is the FOMC candle, okay? So just bear with me, FOMC candle right here. FOMC comes out, and during the FOMC candle, we have a breakout, we rally. 10 minutes later, then we start to get to this zone. Then we get to this zone, and this is 10 minutes after FOMC, okay? If that's what happens, and then we kind of consolidate here around this zone, in this zone, right after FOMC, and then Jerome Powell starts speaking, and then the market starts to sell off, okay? And then if the market starts to sell off, and then somehow during his speech or a little bit after his speech or right before the speech ends, we end up coming back up to test this zone. This zone could be the trigger, right? This could be a trigger to get into a long. This could be a trigger to prepare for a long. And there's so many scenarios, right? Because if this market starts to sell off and we only get down to maybe play on the opposite side, I'm looking for the long side, right? If we sell off during FOMC and we sell off to maybe these 400s, for example, and then Powell starts to speak, and then we start to consolidate, and then we start seeing a rally, there could be a signal to buy, right, after the speech, and then we start to hold up, and then we break through. So there's so many different scenarios, which I'm okay with using for technicals, but during the news and probably like during FOMC and after, like so many minutes after, these technicals mean nothing. Like this, the market could just not even care about anything. Now this is an extremely higher time frame. This is an hourly chart, right? So you can imagine as you zoom in to a 5-minute chart, technicals mean less and less, right? The technicals the more you zoom in, the less the technicals will have an effect during those events. I'm going to adjust that again. Green. I never thought about. Maybe I could just adjust the color. What color could we have? White. Yeah, that's not a bad one. Okay, so yeah, maybe something like this, right? This technical, is this going to play tomorrow? No, this is less important, right? So the smaller and the more zoomed in, the less that the technicals will play. I have to get used to that white. Yeah, that's better. That's better. So the less the technicals will play. I hope I'm making sense. Okay, well, there's the Nasdaq. Nasdaq expecting, maybe some chop, maybe consolidation. We are looking pretty bullish, to be honest, tonight. We are looking pretty bullish where we are kind of making a bullish flag. We test these highs. It's kind of, are we looking similar to what we were last night? I mean, it's looking a little more bullish tonight than we were last night where we had this down pressure, and I was looking to get in long for a breakout. We ended up breaking out an hour before the London Open. And then tonight, we're kind of doing the same, right? We're kind of doing the same where maybe we are making higher lows. Well, we are making higher lows, pretty obvious. And we are testing up these upper 500s. The high of the New York session today was, 620s. And where did we open up tonight? Let's see. We opened up where? Right here. Oh, we had some volatility at the open. So it looks like we closed and opened basically right there. So we are up for the night since we closed. Let me see the New York session close. Interesting. We did close, basically at this zone, right in these mid 50s, 560, 559, which is kind of funny because this is where I got in short, right? This is what I was actually shorting during the New York session. I shorted this. Let me go over it, and then we'll look at these other markets. I don't mind showing. Let's go. I think that's it. We'll just do that just to be safe. Yeah, that was my short. Same thing I did this morning. I got into that short right here. See, 555, 59, 48, 48. I ended up getting in short just because if you guys remember during that New York session, we rallied up and we came and we got over here to this, let's see, this resistance, right? So that was a nice resistance zone. And that's basically where I shorted. And it wasn't a big short. I think I covered for 20 points on average, 20 points, just a quick in and out. And we are continuing to hover at that zone. But this morning was the better one, right? This morning, you can't make this one up. This is a little bit of luck, right? When you can buy 65 and a quarter with Nick for a tick and I. Man, that was one where you wish you had back and you wish you just could have a runner wherever it is. Let's see. Yeah, that was just insane. This is one that I will remember for a while. If only you had a runner, right? Typically I get into 5 contracts. I was only in 3, but yeah, so be it. It was actually insane. That does not happen. I'm just showing off. Hey, you know what? I'm going to honor. I'm going to enjoy that. Sometimes like last night. Remember last night where I ended up, there's the news. I ended up buying right here and then we just sold off, right? So sometimes you just have to appreciate when you get into a good position and you have good entry, especially on a day like today. And some of that, sometimes you just have to appreciate it, enjoy it, and feel good about it, right? We're always too busy feeling crappy about our own trades. It's okay to feel good every once in a while. It bounced off the previous day's point of control. All right, let's get back at it. Yeah, a whole lot of nothing tonight. All right, let's move on. Let's move on to crude oil. I'm going to switch over to that demo account because I haven't been trading crude in my live, so I'm not paying for the data fee for the live yet. So crude oil, unfortunately, is just a mess. This is a daily chart on crude oil. It's been sell off for a while now. What do we do? We zoom out, and this is looking from a very, very, very zoomed out, right? This is a daily on crude. You could see how we finally broke through this, right? Broke through. We came back. Are we going to retest this? Maybe there's an argument to be made where we do something like this, get some type of a rally, some type of a bounce. I would like to see this because, to be honest, I'd like to look for trades to short crude oil because a lot has changed. You could see we've had this massive sell-off. Maybe not massive in terms of tick value, right? Because there's been bigger sell-offs that come a lot faster, right, in a day or 2 days. This one is more of just a very drawn out, very uniform sell-off. due to a new presidency, new politics, and all that fun stuff. So on the daily chart, you can see it's just been sell, sell, sell. Find areas as we zoom in. It's more obvious. It's been straight down. And, you know, maybe we are seeing an opportunity tonight. Is this an opportunity, everybody? I don't know. This is pretty clean structure on the 1 hour chart. And every time we come up against this upper trend, it's been a decent sell opportunity. So are we seeing a selling opportunity as we are watching this market right now? Possibly, right? I mean, every time we've done this, every time we've came up here, it's been to short crude. And why would this time be any different? We are at a nice level, right? This is a nice level. It was support. Support's becoming resistance. And maybe we can make a run back down to $73 a barrel. Maybe we could make a push down to this next level of support, this zone, right around 72. That could be possible. But yeah, this is looking like a very clean short trade if I've ever seen one. I like it. And as we start to zoom in, if we want to go ahead and clear this, I mean, look, we kind of consolidated here too, and now it looks like as I've started this class, we are starting to break down in this consolidation. So we are starting to break down a little bit. Interesting. So remember, it's not a signals class. I've put the risk disclosure in there for a few, you know, I'm going to just do that again. Anybody who missed it, this is not a signals class. This is just for education, but it's looking pretty tempting to short crude oil for an overnight. Now, we do have to understand that crude oil is very sensitive to headlines and anything at any moment. I mean, that's with any market, right? But particularly crude is very sensitive for geopolitical risk, right? And yeah, but that's looking pretty tempting. Let's take a look. Maybe it has a decent risk reward. You know, if we was to get in short here, 73, we'll do 73 3/4 just for easy math. My stop loss, I mean, I personally would have it right there at 74. I mean, right above this consolidation. So, I mean, possibly a decent, maybe a decent 4-to-1, 5-to-1 risk reward, right? That's a good risk reward. Risking 31 to make 175. So, yeah, that's a pretty good risk reward. Why have a stop loss there? Well, because it's at the bottom of this consolidation. You can even, you know, widen the stop loss up a little bit. Why am I looking at 72? Well, maybe we could have it a little bit lower. It's because there's some support in this zone, support right around the $72 a barrel level. And yeah, just somewhere right there. So that is a decent risk reward, even with a higher stop loss. And now remember, this is an hourly time frame, so maybe it doesn't play out in that amount of time, because here at Topstep, we're day trading in and out of the same within the same day. However, that shouldn't prevent you from trading this, right? If this is your overall idea, and say, you know, if this was a swing trade, right? If this was a swing trade, this is how I would trade it. Now, just because this is a decent swing trade setup doesn't mean you can't trade this using a day trading strategy. And all that is I'll take short trades between as long as the market is between these two zones. I'm going to be looking for shorts, right? I'm going to look for shorts and short opportunities this entire zone. As long as the market's here, while I'm day trading, maybe I'm scalping, maybe I'm looking for 10 ticks, 15 ticks, 3 ticks, whatever it is. And this is a good point of letting higher time frames and higher analysis from the top down help you position yourself better on your shorter term trades, like scalping or, you know, just day trading in general. So you could technically say, as long as crude oil is anywhere in this zone, I'm going to find areas to short this. Maybe I'm looking for 5 tick shorts, 15, looking for setups to just short this. As soon as crude oil starts to break above my, you know, theoretical stop loss, then I'm no longer going to look for shorts. As soon as crude oil gets down to this zone, the 71, 72 zone, then I'm going to stop looking for shorts. And until then, I'm short biased. So you can have that. You can have kind of a short trade idea or a swing trade idea and then day trade off of it. Anyway, moving on. Let's take a look at the Nikkei. It's the Japanese market. And this thing has been volatile. This thing has been very volatile. Let's look from the zoomed out point of view. We're right in the middle of this consolidation. We are. Coach Jay and I last week, we were talking about this. We were talking about it for a while. If Coach Jay is here, you know exactly what I'm talking about. Coach Jay joins me on Wednesday nights. This is and has been and continues to be a range-bound market. This is on a higher time frame. This is the daily chart on the Nikkei. It's sell these highs. Beautiful opportunity. Woulda, coulda, shoulda, sold. It's great. It worked out. And then guess what? Buy these lows. We're right in the middle. So it's basically, for me, a no trade zone. Tomorrow's big. Tomorrow's a big day. Lots of earnings, FOMC. So this tomorrow could easily push this market right back up or right back down, and then maybe we could see some opportunities from there. That being said, looking for any trade, I mean, there is something to be said around the middle of this, right? If we want to come in and say, yeah, you know what? Honestly, this is the middle of the range, but guess what? In the middle of this range, there has been some support and some resistance. So if you are looking for a trade, then yeah, you know, maybe some type of support here for a temporary pullback, right? We've already seen a little bit of it. Or if we do continue to break down, we look for a sell-off. So there is something to be said, even though we are in the middle of the range. There is some support and resistance right in the middle. Like, this is a very textbook technical market from what we're seeing here on this higher time frame. It's very, very textbook, simple, straightforward. Obviously, now that I mean, it's easier to read the market, you know, in the past than it is trying to predict it in the future. But I mean, it's pretty straightforward, right? And yeah, maybe there's some opportunities long. Maybe we could come back up and retest it. I'm not sure with tomorrow. It's just being patient, waiting, sitting on your hands, waiting to see how it plays out. As we zoom into the hourly chart, the Nikkei is looking a lot worse than the Nasdaq, right? This is that gap from Sunday night. That's way up there. I mean, like, that is quite the move. I mean, that's not as bad as the Nasdaq, but you know, in comparison, like, look at this. It's still quite a sell-off. We still have not recovered as much comparing that to the Nasdaq. However, we are finding support, right? Higher lows, higher highs. This is a channel. This could be looked at as maybe a bearish flag if we start to break down. If not, maybe we just hold this channel. Maybe we rally up from there. It's hard to say. It's very hard to say here on the Nikkei. Let's move over to gold. Let's take a look at gold. Buy the dip. It's continuing to be buy the dip in gold, right? Nothing's changed in gold. I mean, nothing, right? It's the same story. Buy the dip. It looked like we might sell off a little bit, but yeah, as I was talking about last night, remember this pattern where we kind of ran and faked out from that a lower low? Essentially, we did the same thing. We ran. We had that. That's kind of uncanny how similar this is, right? Here's a low. Here's a little bit higher of a low. So if we zoom in, let's look at this. We can compare it. I love patterns in the markets. If we look at this, here's a low. Here's a higher low. And then we ran stops. And then after we ran stops, we rallied. And so if we move over, and we could kind of see that, right? Here's a low, here's a higher low, and then we ran stops. And then after we ran stops, we're starting to rally. So there is something like this. Now, of course, it's not going to be perfect. Very rarely do you see these markets being perfect. But that's kind of what we got in terms of technicals. And it's continuing to be a buy the dip market. Every little sell-off that we've had since 2025, basically, since December, has been great buying opportunities. Even if we zoom out a little bit more, I mean, we're getting there. We're approaching all-time highs here in gold. There's the all-time highs, 28.20s, 28.25, 28.27. We do have a lot of congestion in this area, in this zone. There's a lot of resistance. But if we could break through these upper 2700s, 2780s, 2790s, then, I mean, all-time highs might be the next stop. I'm not going to be trading it tomorrow. We're going to see a lot. A lot's going to happen tomorrow. There's going to be a lot of decisions being made tomorrow. There's going to be a lot of trends starting. I mean, just tonight, over the past 10 minutes, here we go. Gold might be looking to break to new session highs tonight. I mean, it looks pretty bullish. I mean, you can see where we made this pivot high, and yeah, I don't know. Next 24 hours is going to be big. Tomorrow night, we're going to be talking, and markets are going to be making some decisions. That's for sure. CO2. People place stops below the lows. Yes. Yep. That's what. It's kind of what gold's been doing, right? When I was referring to that on the 1 hour chart, where we make that run, and then we make the run again. So people that had stops probably are not happy. But you can see where 1 hour time frame right here, kind of like a little handle, looking like we're breaking out. If we zoom in, there's that little handle. It's looking a lot bigger, right? As we start to zoom in, the handle right there. Bob Fairchild, is running stops the same as them popping? Sure. It depends on how you use it. I mean, every trader might have their own lingo in how they refer that. I mean, you could say popping stops. You could say running stops. You could say liquidity run. I mean, look at this, right? You could technically say this right here. This is on gold. You could say, this popped some stops. We ran liquidity. We ran stops, whatever. Essentially, it's a fake out. That's all. I mean, you could boil it down to whatever you want to call it, but it's a fake out. It's when it's a false breakout in a direction. So if we look at the hourly chart and go back to those examples, like this one, we tried to break down and reverse, and we didn't, right? So we got faked out, and then that happened again. So I mean, it depends on the time frame you're trading too. Mike Garcia, people can Google these questions. You know what? They can, but once again, we have new traders joining all the time, and sometimes I don't mind. If it's repetitive, then I start to get a little annoyed. If it's the same traders asking the same questions over and over again, then it could start to be like, you know what? Now go Google it. Like 3-bar reversal. Whenever I hear traders ask me 3-bar reversal over and over again, and I could see it's the same traders, then I just Google it. Like I don't mind explaining, because we have new traders all the time, and we have traders who are just starting, right? We have a trader that this might be your very first day. This might have been your very first day in the futures markets, and you don't know, maybe you don't even know what a candlestick pattern is. Maybe you don't know what support and resistance is. And those are the traders that you have to understand. There's no such thing as a dumb question unless you continue to ask that question after it's been answered. If you keep asking the same questions over and over again, that's definitely different. I feel like every day is my first day. I mean, every day is a new day in these markets, right? You don't tend to have the same exact day in the markets, or at least it doesn't feel like it. The market is always doing something new. Mark S. Man, do I have an options course? Nope, I do not. You could probably Google what I do in options. It's nothing special. It's like the will strategy. You're just selling covered calls and selling cash secured puts on stocks and indices that you like. It's nothing special. There's no secret. It's called the will strategy. You could probably Google it. It's like, yeah, I want to own NVIDIA, but I don't want to own. Speaking about NVIDIA worked out absolutely amazing. I sold some $115 puts on NVIDIA, cash secured puts. It got down to 16 yesterday, and they expire Friday, so I'm pretty happy with that. Gonna just tomorrow, we'll see what happens tomorrow. I might sell them again. I might sell some more, but something simple. Some of the most basic strategies I found work the best. You're not gonna find get rich strategies. Look, like today in on fast markets and last night's trade, $6,000. If you take away and stop thinking about the dollar amount in terms of percentage, 6%, almost 6.5% in a day. That is abnormal, right? You could tell me if someone made me 6% in a quarter, I would be happy. If someone makes 6% in half of a year, they're good, right? I'd be happy with 6% in 6 months. 6% in a full year is relatively good, right? 6% is, you're doing well. You're outperforming. So, I mean, it just seems very aggressive. Just selling covered calls casually. You can sell one covered call with 100 shares of any stock, say a $10 stock, right? Like you don't have to own and have a ton of money. You have to start somewhere, though. You start somewhere. I think the key is to not lose money. Have I done a Rising Star interview with Tom on Tasty Live? Oh, that would be cool, media. Get on there with Tom Sajnoff, do a Rising Star. If he's ever watching this, or if anybody knows him, I might have to reach out to MP or the team. I would love to get on with and have a conversation with Tom Sajnoff. FA trades. That's genius, huh? Hindsight. We're doing Captain Obvious here tonight with these questions. Just try not to lose money. You don't need to risk more than what you can afford to lose. All of the basic stuff continues to be the correct answers. So we watched the 5-minute and take trades on the 1-minute. Nope. You can see I've been watching, and a lot of my setups are taken on higher time frames. I was looking at the hourly chart. I looked at the daily, then the hourly, and then the 5-minute. And if I do see a good setup, I'm going to take it and probably get triggered in on the 5-minute chart. Last night, I was just zoomed into the 1-minute. Because it's a smaller time frame is a little bit more entertaining to watch the price action and to kind of zoom in, right? Zoom in and start to really see what's going on in this market. On the New York session, I look at the 100 tick. The truth, though, yeah, it's the truth. We're humans. We love to overthink. We love to overanalyze absolutely everything. Handheld ATM. I want to be a VIP member. Now, remember, it's now Wednesday's price action. There's plenty of room. If you guys missed it, tune into the day show, TopstepTV, as well. They are doing a team draft. It's 2 teams a day. There's 10 teams, and we're running into this buffering issue. All right, let's pray it doesn't last long. Refresh your YouTube if it starts to buffer for you. But anyway, yeah, there's going to be 10 VIP teams. They're doing a draft for 2 teams a day. They've done 4 teams already. They did 2 Monday. They did 2 on Tuesday, which was today. And they're going to do 2 tomorrow, 2 the next day, and 2 the next day. So, and each team has 50 traders. Oh, come on, YouTube. Don't do this to me. Okay, I think it should be okay. If it's lagging, refresh, please. So tomorrow, there's going to be 2 more teams, which is 100, and then more and more and more. So what is that? 2, 4, 6 teams left to draft, 50 traders each. 6 times 50 is 300. 300, right? 300 traders left to be announced. It is fine. And then guess what? This isn't the last time. This is not the last time. I believe, Andrew, correct me if I'm wrong. I believe after 3 months, they're going to redo the draft. And I don't know how often. I remember this is the very first time. This is actually season 2. And Topstep VIP is going to continue to improve. There's going to be it's going to be nice. It's going to be consistent. And this is, from my understanding, the start of how the Topstep Trading League structure begins. I'm super excited for the Topstep Trading League. I'm curious to see the structure. I'm curious on exactly how it's going to work. But this is just the start. Like, amazing things to come. From where we were at a year ago, it's night and day. No. Warning, recordings cannot be paused. Going through. Everything still looks good on my end, to be honest. Yeah, it still looks all good to me. I have no idea what's going on with the buffer. Where can we see the teams after the show has ended? Andrew, I'll let you answer that one, but I've been keeping track of everything on the Twix, Twitter or X, whatever you want to call it, and Topstep typically posts everything there. That's where I have been keeping track of it, is there. Or you could tune into the Discord. Topstep has a Discord, and all the details are there as well. Mike, my grammar sucks, all right? Let's make sure we understand that. My grammar is not the best. I grew up in a very small town, and you'd be surprised. My grammar was a lot worse than what it is. Everyone used to think I had a country accent. Driven Latino, you can be selected even if you have XFAs. Yes, you can be selected even if you have XFAs. Does not matter. It's random. I grew up in Eureka. The city that I grew up had a very small population. Let's see. Let's get to some of these questions now. Let's open up to some questions. Remember, tomorrow is big FOMC. We still have 40 minutes left in class, and let's just get to some good questions and have some fun conversation. Why don't we? They're catching some buff during At the Buzzer. I think it's YouTube. I think something's going on in YouTube. BBC, Coach, what do you mean by running stops? I did explain it. Running stops, running liquidity. It's, as you can imagine, I mean, let's take a look at, there's so many examples, right? You can probably see it on the 1 minute. Here in the Nasdaq a lot better. So if we take a look at the Nasdaq, there's so many examples. Let's zoom in and find one. Here's a decent one. Okay, so running stops, this could be a decent example right here. Is everyone who is long and everybody who is buying the Nasdaq in this area probably had their stop below this pivot, right? And the market tends to just make a run, faking like we're going to break down and break below. We faked out and then we turn around, right? So that is one example. I'm sure you can make another example. Look, here's another one, right? Right there, where we fake like we're breaking out and then we turn around. So it's a fake out. Ran some stops that were right there. And you could probably find these examples in a lot of places, a lot of locations, especially in the Nasdaq. Like here's another one, right? Everybody who is like maybe shorting there, we make this nice little run, faking like we're going to break out and then just sell off. And then here's another one. This is probably the best example that I have, right? Everyone who's long maybe thinking that this is a double bottom. Yeah, it looks like a nice double bottom. And then, everyone that is long probably has their stop loss. So just imagine this scenario. You get in long. Where are you going to put your stop loss? Odds are this seems like a decent place to put your stop loss, right? Stop loss somewhere below the last pivot. Well, guess what? If you're a big trader, you want liquidity. Sure enough, we ran the stops. Everyone who's long gets stopped out. When they get stopped out, market just takes off. Wow, that was a pretty decent trade right there. So this is an example of a stop loss hunt, a fake breakout, a liquidity run. I've heard it so many different phrases for this one in particular move. This is a good example I've been talking about over the past month is, usually the better entry is where you put your stop, right? I've been talking about it on TopstepTV for fast markets for the past month is, guess what? Where people put their stops? Most likely it's the better entry, right? So if you're long somewhere, maybe you're long here, maybe you're long, say, after thinking this is a double bottom, you have your stop loss here, where, honestly, this is probably a much better entry, and it works out. It's not going to work 100% of the time because nothing works 100% of the time. There's plenty of examples where the market just sells off, and we don't run liquidity. And if this is your entry and you get in, long here, and the market just keeps selling off, then you take a loss. Like that's the reality. It happens. Look, here's another example, right? Where maybe this was a run of stops. Somebody who had their stops below this pivot from the New York session open, we ran it, and you're probably upset, right? So, there's plenty of examples. The question is when, and is it going to happen? What's it going to happen? This was a bigger run. If you guys watched, you could see, I'll show you. Today during the New York session was a good example on how I was trading it and what I was trading. If I I'm going to zoom into an extreme 100 tick because that's what I was looking on. So let's do that. So here is a good example, and I will show you just that. So here it is. I got in long one contract right here. During the New York session, this is exactly, rewatch it. It's on YouTube. You got to see it live. I got in long one. I had a pretty wide stop loss. My stop loss was pretty wide. I'll have to look over here on the left. But you could see, it was a great trade. It was a good trade. Obviously, woulda, coulda, shoulda closed it out here. I was up, 15, 20, 30 points. And then we sold off. I closed out for a loss right here. And then, this is another good example. Everyone who was long like me, everyone who got in long in this area, guess what? Where would they probably put their stop loss? Somewhere below. You can imagine this is very, very zoomed in. Very zoomed in. And I'll show what this looks like on the 1 minute. Well, guess what? Stop loss is a better entry. And guess what? I practiced that. You can see I got in right at 65 and a quarter. I just bought it right there. And that, it took some courage, to be honest. I was nervous, especially when the market's selling off like this, and I bought that. Not a lot of people, and even for me, I'm just like, sometimes the market could just continue to just sell off and you get smashed. Well, I ended up getting in one, and then we consolidated. We started to hold, and as soon as I seen we started to hold and consolidate, you can see I got into another one. I got into a second contract, and I wish I could have built a bigger position. I probably should have, would have, could have, on maybe this pullback or another pullback. But yeah, that's the idea of running stops, and I'll show you what it looks like on maybe a 5-minute time frame. Right, 5-minute time frame. That's not a great example. Let's see, a 1 minute would probably be a little bit better of showing you that liquidity run, right? Yeah, that 1 minute, good example where everyone who's long here, we ran the stops, right? We ran stops, and then we rallied. And so stop loss, better entry, and you could probably look back at here, stop loss, a better entry, right? And so forth, right? Stop loss if you're going to short, better entry, and you probably find so many examples. Like here's that same scenario, right? Stop loss, a better entry for those longs, vice versa. Another one, right? It's kind of weird how often it plays out. The question is, how do you know it's just a stop run and we're going to reverse and go the other way, or not, right? That's the question. That's the $1 million question that I'm sure plenty of people would love to answer. And I don't think there's, an exact way to know which one is which one's a stop run, which one's not, which one's a breakout. I don't know. I don't know. That's the multi-million or even $1 billion question is this a stop run? Or is this just going to be a breakdown and a continue to sell off? If you know the answer, tell me. Help me understand that. Maybe the best thing to do is look at either volume, maybe look at some type of indicator, maybe something as simple as trend is up, right? When the trend is up and the market's going up, you look for the stop runs to be buying the market. When the trend is down, you look for stop runs to be selling the market. So maybe it's something as simple as that. But yeah. Order flow could help. Yeah, I've heard order flow could be very, very useful in terms of that. It's so simple. It's simple. It's one of those things where it's a lot easier said than done. And it's a lot easier to say it after the fact and go back and review it than to do it and place the trade in real life, right? Live as it's happening. The fact of the matter is you will never know for sure. Yes, it's never going to be 100%. You're not going to find anything 100%. That's a fact. There's plenty of traders who spend their lifetime, hours and hours and hours. There's teams that spend hours, hundreds and thousands of hours trying to find the edge, right? There's institutions, there's hedge funds, there's so many companies who spend millions, if not maybe billions, trying to crack these codes of the markets. And it's not just here in the US either. You could probably even have countries. I mean, you can imagine institutes, not just in the US, you have institutes from around the world, right? China, Asia, Japan, the UK, right? Everywhere. I mean, London, everybody. I'm deep seek right there is a joke. Trying to find out how to, make money in the financial markets. Then one single person, odds are they're not going to be able to make it. And if they do, you're not going to hear them talk anything about it. You'll never hear them talk about it. They're not going to write a book. They're not going to sell a course on how to do it. Maybe they found something that looks interesting and you could convince people it works. But yeah, that's a different thing. Nikkei big. Nikkei's not doing too much. A whole lot of nothing tonight. I'm not expecting the markets to move much. Remember, tomorrow is such a big day. I'm not expecting, I wasn't expecting, I'm going to be honest, I wasn't expecting this big move today. I was not. This was quite the move today in the New York session. 2.5% from, or almost 2.25, almost 2.25, 450 points from bottom to top. I was not expecting this big of a move today, especially with tomorrow being so volatile, or a lot to come out tomorrow. But we are getting a decent one. This is looking tempting to buy, right? This one is looking tempting to buy. Oh, I think I might get in. This would be a textbook breakout right here. This is a setup to buy where this is a flagging pattern. Full pour. Yeah, this is a flagging pattern. This is a very basic flag pattern where we're making equal highs, higher lows, and if we're looking for a breakout trade, we maybe look for a breakout. My take profit would probably be somewhere around this, right? Somewhere around this if we want to extend it. So there's probably 20 points. Maybe there's a 20 points worth of room. And let's take a look. Where would my risk be? I'd like to see my stop loss maybe right here. Maybe a little bit tighter. And if we get in, let's just do a hypothetical. Looking to make 18, risking 18. So about a 1-to-1 risk reward with this. If my stop loss is lower, it would be upside down. Interesting. We could watch this one play out. We could watch it play out together. I'm not going to take it, but we could watch it play out together. Am I thinking about making changes to my strategy after reviewing last year's trades? Yeah, I talked about it. I demonstrated it today during the New York session. If you want to rewatch the first 20 minutes of Topstep TV Fast Markets, you're able to see me actually implement that strategy where I'm getting in where my stop loss is. I kind of showed that trade earlier down there in the Nasdaq, right down here, where I ended up buying 165. It worked out pretty well, knock on wood. It was, there's always some luck involved when it comes to any particular trade, because you never know. 100%. Claude, to use stops as entries was a genius idea. It's not my idea. That idea has been around for a very long time. It's done a lot of good. There's a lot of great traders, older traders, not just day traders, investors, swing traders that use and talk about that same idea, right? Is you put your entries where the masses put their stops. I mean, it's a lot of people know about it. Not a lot of people actually do it because psychologically it's hard to do. It's like one of those things where, we kind of all know and have an idea of that, but who's brave enough to actually do it? And how do you manage it? And then how do you not blow up if the market just breaks out? It's so hard. It's such a logical hurdle to do. Hurdle. Will you be in a trading tomorrow during FOMC? I will be on Power Hour tomorrow with David Green. I don't know if I'm going to be trading. We'll see how the market's reacting. But I okay with trading if the market settles down. I will not trade FOMC. I will not have a trade going into FOMC. I will not trade immediately after. I would trade, once things start to settle down a little bit. It's hard. It's hard to do. Maybe on a practice account. Yeah, I've been spending some more time in practice accounts. I have been spending a lot more time over the past couple weeks in practice account, just practicing. Coach, how do you capitalize on running? I'm going to go through some of it if I miss these questions. I think I got to a lot of them. I sounded like a Dr. Seuss book. It's I bet Jay has VWAP attached to the FOMC candle. Ooh, let's do it. Should we run a poll? I think so. I think we could. That would be a fair bet. Is we have Coach Jay attaching his anchored VWAP to the FOMC candle. He's a great trader. More than he gives himself credit for. What's my bias going into tomorrow? I am bullish on VIX. I am bullish the VIX tomorrow. Some days I don't trade. Correct. Yeah, Joe. Some days you probably shouldn't trade. Somebody who trades every single day might be over trading. It's okay to take a day off. How do I use anchored VWAP? I do not. Coach Jay is much better than I am. I do not use the anchored VWAP. I'll probably talk a little bit about it more during my VIP coaching. Remember, my draft is this Friday. We'll be doing the draft for Pop Squad, which is my team's name, and we'll be hosting some classes just for those 50 traders, and maybe explore the VWAP, the anchored VWAP. I'm not great at trading it, but it's something interesting, and I think a useful tool like a VWAP or a simple moving average can be useful for a new trader, just to get used to market trend, market direction, and maybe even keep the trader out of any bad position, right? So the way that I personally, from my understanding, would use a anchored VWAP is, somebody might correct me if I'm doing this wrong. Like, here's anchored VWAP. I would connect it to the New York session open, right? And yeah, it looks like throughout the whole entire New York session, we just went straight up, right? Then there's something that's just the regular VWAP that I think it takes into consideration from, I don't know, the entire move, right? From where we open at 5 p.m. Central is what it considers. Which one's better? I don't know. I mean, I don't trade these, but I think either this or something as simple as a moving average, right? A moving average can help a trader not take too many trades, right? So here's, for example, here's how I view the anchored VWAP is if the market's above the VWAP, you only want to look for longs. If the market's below the VWAP, you only want to look at shorts, right? And as a new trader, that is probably one of the most simplest things that you could do. And hopefully it helps a lot of new traders. Just something simple like that. Nasdaq's breaking out. Yeah, here we go. Let's watch this breakout. Where did I say I would have got in at? Let's say we would have got in there. And my risk was going to be right there. Reward's going to be here. So let's see how this trade. This was a 1-to-1 risk reward. We could watch this trade play out together. Could this one be popping stops, right? I don't know. This one looks like it's actually holding. We do have this little area to get over. The simpler, the better. Yes, it is. Yeah, we are breaking. I said Did I say 71? Were we already down there? Maybe. I was talking about it somewhere right here. The stop run is one of my bread and butter setups. Looks for 2 clear legs that go beyond the swing and then the strong bar in the direction you want to go. I trade these every day. It works. Okay, so I did say 71. All right. Let's see. Yeah, this is a good example of a breakout so far tonight. Alan, I did take a payout. I did. You use the MACD heavily? What confluence do I use? Technical analysis. Massive payout. Thank you. $15K Miller. Waiting for a retest. I don't know. Markets are slow tonight. There's probably a lot of people that's just waiting for tomorrow. Remember, tomorrow's a big day. Markets could easily take a break. It's already been a crazy Sunday night, crazy Monday, kind of a crazy Tuesday, right? With this big rally. And yeah, maybe just some time for the market to settle down. But yeah, we've seen some crazy moves this week. Lots of volatility. I'm okay with this market settling down and not taking a break. Definitely take a break until tomorrow after FOMC. This trade's working out pretty well, though. The rest of the week should be a bright night. No, the rest of the week, tomorrow's going to be big. Tomorrow after hours, during we have earnings. There's still a lot of volatility to come. How many payouts in a year? You could take as many payouts as you want, Joe, in a year. Every 5 days, right? Tomorrow will be a big day. I'm going to take payouts more consistent, everybody. Yeah, I'm going to take payouts more consistent. I'll talk about it more later. I'll talk about it more later on in the week. I'll talk about it next week. I talked about it last year too. It's probably best just to take payouts more consistently. Kind of lead by example. I want to see traders take payouts, pay themselves, and the question is, how does one take a payout? That is another golden question: is what's the right way to take a payout? I don't know. The right way for me could be the wrong way for someone else. And I think it just depends on what your needs are and what your own goals are. Blue Knight, have you ever considered competing in the Robbins Cup? No. Nope. What's the winning 5 days in live before payout? Once you get over 30 winning days, they don't have to be in a row. You could take up to 100%. Money market is getting you over 4%. You're talking about CDs? Depending on where your bank at. Yeah, 4 to 4.5% is correct. Ellie, Dakota bankrupting Topstep? No, that's what happens when you're in a live account. It doesn't come out of the company's pocket, right? Any profits made in a live account comes from the markets. The 6,000, for example, I made $6,000 today. I made almost 6.5%. That does not come out of Topstep's pocket. It's straight out of the market. It came out of thin air. That's what trading is. You make money out of nothing. $6,000 came from the market. I get 90%. Topstep gets 10%. And so it's the exact opposite. Not bankrupting the prop firm. That's how a true prop firm works. The true prop firm moves traders live, and that's what the percent split is. That's what a true prop firm is. And I don't know why it's so profits making this way. And they forget to realize that a true prop firm works like this. Live accounts. Except it's not easy to get in. Yeah, it's not easy to do this. I will admit that. The simulated environment is great to practice. LTP, you are stuck on the beer topic. I've heard you say you are now taking profit at 20 points on live markets. How does that affect your risk reward and overall profits? A. Smith this morning during the New York session gave a really good example of what I'm looking for. So I would recommend watching TopstepTV Fast Markets. It was the first like 10 minutes of the New York session, maybe first 20 minutes of the New York session. Is I'm taking what the market could give me. I think a good example, I don't use an indicator, but a good example is using, if you want to have an idea, is an ATR. Okay, so I discussed this sometimes. I've discussed it before, but an ATR gives an average true range of what the market and kind of a decent gauge of volatility. Okay, so if let's go a 14, okay, we should be good. So ATR, average true range, and if we want to compare that, I trade off the 5-minute chart. It's not an exact, right? But this, for new traders to help understand, is taking 1 or 1.5 ATR should be just enough, right? It's perfect. If you're able to capture 1 to 1.5 ATR on whatever time frame you trade, you should be very happy, right? So this morning, you can see that the ATR when the New York session opened about this time was about 35 points. 35 points. And I was happy with that. Now, you trade long enough, you kind of understand, and you could see volatility, and you could get a good gauge of what a decent ATR is, like a decent move is. And so throughout the New York session, especially today, every 5 minutes, on average, the market would move, looks like it got up to 40 points, right? So at this point in time, it shouldn't be too difficult to have a 40-point winner. 40-point winner, 1 ATR. That shouldn't be too difficult. It shouldn't be too difficult throughout this New York session. The way this New York session is to make 30 points in a single trade, to make 40 points in a single trade. Anything more than that, your trade should probably be based off of a higher time frame, like maybe an hourly time frame. Then if you're trading off an hourly time frame, like, I'm going to look for 1 ATR, well, then maybe you could catch 100 points, right? Maybe you could catch a bigger move if your trade is on a higher time frame. Simple, and it hopefully helps new traders understand keeping realistic expectations, right? This is very realistic. This will keep your expectations in a realistic idea and a manner. I trade off the 5 minute, so I'm okay with taking ATRs on the 5 minute. And then as you zoom out, you kind of see historically, right? What is historically during these peak New York sessions, right? These are the New York session peaks. As you can see here, this is New York session, the New York Open. On a normal day, the way the market's been reacting, 38 points, right? 38, maybe 40 points. And yeah, you could realistically take 40 points in a trade, right? Maybe a little bit less than that. Maybe you could take 35. 35 seems to be reasonable. But then for some reason on the 22nd, 23rd, not a lot, right? 22nd, 23rd, low volatile days, right? There's not a lot of volatility on these days. So going for 35, 40 points might be not as realistic, right? Not as realistic on those days. But then starting Sunday and Monday, right? Starting Monday, man, being able to catch 50 points in 5 minutes, 50 points in 5 minutes, that's much higher, right? Today, normal. Today was a normal day compared to the past few weeks. I mean, then you could start to gauge what's normal, how the volatility is for this week, how the volatility is, how it's been, what should be a realistic expectations. And then today, normal. I would say today's session was normal, about 40 points. You could always zoom out and see the spikes of that or so forth. Tomorrow, maybe we see tonight is, let's see. Tonight on the low, we're down to 7. 7 seems about normal. Tomorrow, we're going to see this. This thing's going to spike really high during FOMC. FOMC, we're going to see a nice big spike. And this can be a useful tool to see if the market's, increasing in volatility, decreasing in volatility. Maybe we could jump out to an hourly chart and you could start to see, this is an hourly chart. Where's the volatility? Well, we could look at, let's look at throughout December, right? Throughout the first 2 weeks of December, it was not volatile at all throughout December. So this is a great way to gauge volatility in the markets. I like this a whole lot better than the VIX. And you can kind of see, on the hourly chart. And then guess what? Take a look at this. The market changed. 2025, new election, new president. Volatility is just, man, this is a day trader's heaven, right? Like we started there and volatility picked up for sure. October, it was nice and consistent, right? End of month, like we see a spike every once in a while. The spike might be correlated with like an FOMC or a news event. This was the end of July, beginning of August. We've seen a lot of volatility. End of July, beginning of August. We know that. We've seen it, right? We've seen that end of July, beginning of August. We've seen the volatility, all this massive sell-off. See how they correlate, right? Massive sell-off, big volatility correlating with each other. And then we come, nice, consistent trading. And now we're starting to see some big volatility come into play ever since the new year and right around Christmas. So that is the way I look at it. What did everybody think of this? What's your thoughts on this? I know it's a little bit unique. It's unique compared to what I typically talk about, but it's also important. As a trader, you must you can understand these things. Will it help you be a better trader? Maybe, maybe not. But hopefully it helps give you an idea of how to understand volatility and manage expectations, right? Catching 30, 40 points in this market, normal. Catching 30 or 40 points in like this market, it's not realistic. So having realistic expectations is very, very important for when you're trading. Sometimes I struggle with it. I admit that. So there you go. I use ATR to tell me when not to trade. Yeah, there you go, James. You could use ATR to tell you when not to trade. That could be a rule, right, in your process where if the ATR is too small, I'm not going to trade it. Or if the ATR is too big, maybe I don't trade it. It could be a very useful tool. Don't overcomplicate it. Keep it simple. Is the ATR 14 the ideal for trades? I don't know. The ATR on this is just the default's 14. It's up to you, honestly. What's the right ATR? Flip a coin. Default's 14, but the idea is the same, right? It's just you're gauging volatility. A lot of people use the VIX. But since I'm trading one single market, I don't need to use the VIX. I'll stick to the ATR on that market. It's all about learning. It helps. Good. Good. Do you have a channel where we can observe your trade on days when you're not on Topstep? No. When I'm not on Topstep, I'm trying not. I really don't trade. I'm trying my best to not trade when I'm not on air, so that way everyone here can see everything that I'm doing. Outside of that, this is the main channel. Oh, here we go. Thank you, Hoop. Take a look at this. Take a look at this one. I'm going to share this link. This is from Anne-Marie. Okay, this is a good one. This is a good one. If you want to learn more about the anchored VWAP, I haven't watched it, but this is coming from Coach Hoop, and I trust him. Knows what he's talking about. So I'm going to end it right there. Last night we went a few minutes over. Tonight we are kind of on time finally, which is a first. That's it. Yeah. Now we're getting so we are getting so English only. I'm sorry, but English only. I do know Spanish, but this is English only. Audrey. You can tune if you speak English. You could tune in and watch. Tune in and watch. Like I don't mind, and we do have some Spanish speakers. Yeah. I think that's it. I think that is it. Is there anything else I missed? Can you French? Nope. Just Spanish. I'm sorry. I'm not that great. I'm working on my Spanish. How do you say tune in and watch? Anybody? Does Mo speak Spanish? Latino. There you go. Yeah. What is it? Venever? Come watch. Is that how you say? Como se dice tune in and watch? All right. Only good words. All right. That started something. All right. Take care, everybody. I will see everybody tomorrow. During Power Hour, after all that. Veniver. So stay tuned. Take care. Bye.